investors have more earnings results to unpack this morning, including MDA Space, George Weston, and CrowdStrike. Let's get more from Grant White, portfolio manager at Endeavour Wealth Management. Grant, it's great to see you. Thanks very much. I saw a headline in the Globe today indicating that war is never a time to sell sell your stocks.
No, I mean, I think the headline's right. I mean, despite obviously the tragedy of the events that's going on from a market perspective, markets have very short memories for these type of geopolitical events, and so you want to be very careful. I mean, I've had a few emails from some investors talking about this as well, and showing some concerns, and that's natural, obviously. But it is something you want to be really, really careful about right now. I think that volatility can really be your ally, though. I mean, if you're a disciplined investor, one of the things you got to be looking for right now, and we've been talking about this for months, but fundamentals are really climbing to the top here, and I think you want to focus on those fundamentals. And if you can find good opportunities to buy in because of volatility, then that's a great thing for you as an investor. So you want to be very disciplined right now, because the headlines can be scary, but that doesn't necessarily mean that it's going to be long-term impact on your portfolio.
Let's get on to some companies reporting. MDA Space, what jumped out for you with those numbers, Grant?
MDA Space is this company that I love. I mean, this is a really great Canadian story, and if you're interested in the economy of space, MDA Space has to be on your radar screens. So this is a great company with a lot of Canadian history in space. The Canadarm 2. This is the company that brought that to life. And today they are big in the satellite game, telecommunication satellites. What stood out to me in the earnings is what we're really looking for is that continued flow of upcoming business, that pipeline of upcoming business, and how consistent that's going to be. And what's looking really strong out of that is we are seeing consistency there. And so I'm very optimistic about this company going forward. We have it as a buy rating. Now, it's a buy with a little bit of volatility to be considered. So I think that there is going to be volatility in this company, but it's very well managed. They do a great job. And I think the economy space is just picking up steam. And this is a great Canadian story at the forefront of it.
Quite the jump. Revenue surging 44%. And so the geointelligence is one of their big businesses, robotics, and then satellite systems. And Desjardins is saying once again, satellite systems was the star performer.
Yeah, satellites, telecommunications satellites, but I mean, defense spending as well. We know that defense spending is going up in many parts of the world right now. And a company like MDA Space, which builds satellites with defense in mind, is going to do probably pretty well in that. And that's also why we're seeing that pipeline of upcoming projects looking so strong as well.
And their backlog apparently is above 4%. It was down 9% quarter on quarter, but Desjardins doesn't see this as a real problem. Apparently, it excludes, for example, RadarSat Plus business.
Yeah, we don't see it as a problem either. I mean, again, what we were looking for is consistency going forward, and the ability for them to execute on that. And I think that that's exactly what we're still seeing from this report too. So still a very strong report from a great company.
What about CrowdStrike? What should investors pay attention to there?
Yeah, CrowdStrike is another really great company. I mean, they are one of the best in the game at what they do, cybersecurity. They're one of the best in the world at it. So it's a decent report that we saw from them. The real challenge we find with CrowdStrike is pricing more than anything. I mean, I think that they have great growth. We've seen that year over year, but that great growth is priced in at this point. And so what we're looking at there is, can we get in at a good entry point? Now, this is a company that if volatility does help us out and brings price lower, it's definitely a company that we're looking at very closely, that we would be interested in. Right now, we just find it a challenging entry point just from the pricing perspective. But outside of that, it's a fantastic business. They've done very well, and we expect that they're going to continue to grow at a reasonable rate going forward.
The George Weston, it's really the definition of a Canadian blue chip stock, controlled by the Weston family and Loblaw. They have that vast stake in that company. You reckon it's not that cheap?
Yeah, it's not that expensive, but it's not that cheap either. I mean, when we look at it from a pricing compared to historical averages, I mean, if you're looking at, price to earnings or other metrics, we're trading slightly above historical averages there. And so, I mean, it's a great defensive stock, though, at the same time. I mean, we know this company, it's it's essentially recession proof with the businesses that they hold. And so, if you're looking at good core holdings, George Weston is a good company that many people across Canada will own. But in saying that, we don't expect that we're going to see a great growth uptick on it from a share price perspective, especially not at this price point right now. So it's a very good defensive stock. It's going to chug along. I don't see any concerns with it. I mean, the report was fine. It was okay. There was nothing that stood out to me that said, hey, this is something that we need to jump into at this point. So it's a good defensive stock that you can feel very comfortable owning. And if the price does come down a little bit, yeah, it's something we might add to. But just at this point, it's just a little bit expensive for what the company is. And when we're looking at yields on it as well, there's nothing super attractive on it. It's an okay dividend yield. If you include the share buybacks, you're closing in on about 3% total yield. But overall, it's nothing to write home about right now. I think there's better opportunities elsewhere.
And finally, what are your thoughts on Apple these days?
I think Apple is such an interesting company. I think it's one of those companies that really is going to surprise people. I mean, they've been waiting in the weeds and then playing that typical Apple playbook, I think, as it relates to AI. Now, we're seeing a lot of really strong releases come out this week with the M5 chip being implemented into a lot of devices, and there's more to come. So I like Apple because I think it's the sleeper pick in this AI race. And I think with their user base, what they're capable of, what they've been able to execute in the past, and what I know they can execute going forward, I think they might be the ultimate winner and still being the ultimate entry point for AI for most consumers. And so with all that said, I think Apple might be a really great winner over the next year or two as it rolls out these new devices and implements AI into their system. They've been slow. We all know that. And I think the share price has been punished because of that. But I think that's also giving us an opportunity to look at this company again. And it's a fantastic business, as we know.
So they've been rolling out multiple products. There's speculation that they're going to unveil, and maybe I'm even behind the 8 ball here, a new lower cost MacBook today. Yeah. Although the company, they're saying we're hosting an experience today in New York. In any case,
yeah, I think we're all watching it. I think it's going to be very interesting, and I think some of that magic might be coming back into Apple. It's not like back in the iPhone release days early on when Steve Jobs would do this, but I think that there is something to be excited about going forward with Apple, and that ecosystem of devices they have is really perfect to implement and execute this AI strategy. So if they can execute well, which I believe they can, then I think Apple's going to be one to watch for going forward, and it might be the central hub of how over 2 billion people access AI going forward. So,
Grant, thank you very much indeed. 2 billion people. Grant White of Endeavour.